Hey everybody! Welcome back to another exciting episode where we dive into the fascinating world of finance and investing. Today we're talking about money, but not just any money. We're diving into the big leagues. But don't worry, it's way more interesting than balancing your checkbook. It's about Warren Buffett, the legendary investor. He's like the rock star of investing. People look up to him for his incredible track record and wisdom. He's so good, they call him the Oracle of Omaha. His decisions can make or break markets. Now, Warren's made a big move that has everyone scratching their heads. He sold a bunch of his Apple stock. Yes, you heard that right. You know, Apple, the iPhone people, they've been doing amazing. Their products are everywhere. Their stock keeps going up, up, up. It's been a solid performer in the market. So why would Warren sell? It's a real head-scratcher. It's like saying no to free pizza. Who does that? Well, he bought something else. Occidental Petroleum. Yep, an oil company. Quite a shift, right? And not just a little bit either. He went big. This has everybody talking and speculating. Did Warren make a mistake? Is this a sign of changing times? Is he losing his touch? Or is there a deeper strategy at play here? Stick around because we're about to find out. We'll break it all down and see what this means for the future. Let's break this down, people. We've got Apple, the tech giant. They're like the cool kids in school, always coming out with the newest gadgets. And their stock? It's been on fire like a rocket to the moon. Then we've got Occidental Petroleum. They're in the oil business, which, let's face it, isn't exactly the hottest thing right now. It's a bit old school. And their stock? Let's just say it hasn't seen the moon in a while. So, Warren sold some of the cool kids stock to buy more of the old school stock. Makes you wonder, right? Okay, so the experts, they're a little confused. It's like watching your friend order a salad when there's a giant plate of nachos on the table. They just don't get it. They're saying Warren missed out on a lot of money by selling Apple. Those stocks were like golden tickets, and he traded them in for, well, not golden tickets. They also think oil isn't going to be a great investment in the future. With electric cars and everyone trying to be more green, oil seems a bit, well, yesterday's news. Section 4. Buffett's Big Bet. Seeing what others miss. But hold on, folks. This is Warren Buffett we're talking about. The Oracle of Omaha. A man who has built his fortune on making smart, calculated bets. He didn't get rich by following the crowd. No, Buffett has always been a contrarian. Someone who sees value where others see risk. He's known for seeing things others don't. While everyone else is focused on the short-term gains, Buffett is looking at the long-term potential. He's probably thinking about the long game. He understands that true wealth is built over decades, not overnight. See, oil prices can be unpredictable. They fluctuate based on geopolitical events, supply and demand, and even natural disasters. They go up, they go down, it's a roller coaster. But despite the volatility, oil remains a crucial resource. But people still need oil. It's essential for transportation, manufacturing, and even heating. They need it to heat their homes, especially in colder climates where alternative energy sources might not be as reliable. To fuel their cars, some of them anyway. Even with the rise of electric vehicles, gasoline-powered cars are still the majority. So, Warren might be thinking that oil is going to be more valuable in the future. As the world continues to develop, the demand for energy will only increase. Plus, Occidental pays something called dividends. These are regular payments made to shareholders out of the company's profits. It's like a bonus for owning their stock. Imagine getting a little extra cash just for holding on to your investment. It's like getting a little present every few months just for being a shareholder. This can add up over time, providing a steady stream of income. So, maybe Warren's onto something. Maybe he's seeing the bigger picture, the long-term trends that others are missing. Maybe he sees something the experts are missing. And that's why he's Warren Buffett, a legend in the world of investing. Section 5. The Long Game. Trusting the tortoise, not the hare. Remember that story about the tortoise and the hare? It's a classic fable that teaches us a valuable lesson. The hare was fast, confident, and took naps along the way, thinking he had all the time in the world. But the tortoise, slow and steady, kept moving forward without stopping, and he won the race in the end. Well, investing is kind of like that. It's not about how quickly you can make money, but how consistently you can grow your investments over time. Warren's not about that quick buck. He doesn't chase after the latest trends or get-rich-quick schemes. He's all about the long haul. He understands that true wealth is built over years, not days or months. He's like, I'm going to buy good companies and hold on to them for years, even decades. This approach requires patience and a deep understanding of the businesses he invests in. And guess what? It's worked out pretty well for him. His strategy has made him one of the most successful investors of all time. So, even if this Apple thing seems like a head-scratcher, let's not forget who we're talking about. Warren Buffett has a track record of making smart, calculated decisions. Warren Buffett has a knack for making smart decisions, and he's playing the long game. He sees the bigger picture and understands the value of patience. So let's just sit back, relax, and see what happens. Trust in the process and the wisdom of experience. He's earned our trust, hasn't he? Through years of consistent performance and wise investments, Warren Buffett has shown us the value of trusting the tortoise, not the hare.